edition of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 13th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. Here's one I love. It's called Don't Waste a Good Mistake. Learn from it. Picture this. You're in the midst of a war, a battle between the limits of a crowd, seeking the surrender of your dreams and the power of your true vision to create and contribute to heights that only you believe in. I think that qualifies as me, because I'm the bull out here. There's not a lot of us. It's a fight between those who will tell you what you cannot do and the part of you that knows and has always known that you are more than your environment and that your dream, backed by an unrelenting will to attain it, is truly a reality with an imminent arrival. And folks, I want to personally thank you for arriving here at TFNN each day. Together, you and I, we will make the impossible possible. Because impossible to us spells only one thing. I am possible. Yes, I love that. You know, you'll attain your dreams if you make a mistake along the way. There's no question about it. Just learn from it and continue to move forward. You see, those who seldom make mistakes seldom make discoveries. And progress? Well, progress is made by correcting the mistakes resulting from the making of progress. Yeah, think about that. That's right. You make progress by making mistakes. And what we must never forget is that our mistakes, they're not irreparable damage. They don't provide irreparable damage to our lives unless we let them. We are the ones in control of how we interpret mistakes, of how we interpret everything. True story. Persian rug artists, they stand before the rug while a group of boys stand behind the rug to pull the thread after the artist starts it. If one of the boys makes a mistake, the artist adjusts the pattern accordingly so that when the rug is finished, no one can really tell where the mistake was made. That same kind of adjustment can take place in our lives so long as we let go of that mental thread of each mistake and instead let the universe weave it into the success that you and I are. Folks, always remember, sorrow looks back, worry looks around, but faith is always looking up. Life is looking up for you and I, and maybe these markets too. Right now, we've got the Dow trading up 32 points. She's trading out at 16,727. S&P up 3 points, trading out at 1899. NASDAQ trading up 2.5 points, trading out at 4146. Russell 2000. Taking a little breather today. My goodness, it was on the move yesterday. It's down about $1.70, trading out 11.31. NASDAQ 100 up 6 points. New York Stock Exchange up 6 out here. So taking a little bit of a rest. Of course, markets on the intraday time period, they moved in that overbought condition. So the rest is warranted out here. Quick peek across the globe. The DAX right now up 47 points. So it's given back some of its gains. The FTSE up 5 points. Maybe we'll take a look at that market out here. We've got gold right now trading up 20 cents. Flat market in the metals. Gold is trading out at $12.96. Silver at $19.53. We can take a look at those stock charts out there, but not a lot going on. Light sweet crude up 41 cents right now, trading up at 101 even. Stephen, our call number is 877-927-6648. Would love to field your call. Let's go take a look at what's going on. Let's take a look at the daily charts out here. Let's take a look at the Rhodes momentum indicators. Let's go take a look at each of the indexes on the daily basis. Let's start off. Let's take a look at the NASDAQ composite. We'll just simply go in alphabetical order out here. What did we see take place yesterday? Well, let's take a look at what we've seen over the past couple of days. Number one, we saw a nice bullish engulfing candle form on Friday. That was easy to do because the prior session's candle was what? Was a doji out there. But yesterday, right, futures were traded up. That means the composite gapped up, so you got a little bit of a gap up, a rising window out there. That is bullish. Where is resistance inside of the NASDAQ out here? Well, resistance to a certain extent, if we go ahead and let me put this chart up here, inside of the NASDAQ composite. Let's go over and take a look at the composite. Let me do this. It's going to be easier for me to draw trend lines out here. Indexes daily. Let's go find the composite out here. If I don't have the trend line drawn in, we'll go ahead and draw it. Oh, I do. So if we take a look at the NASDAQ composite, one of the weak links out here, what I'm using here is I'm using the open of the session from March 7th out there. That March 7th open is at 43.1950. We take a look at the next area that I'm using, and that we really, in essence, have very close to three co-located opens and closes. You could say almost the March 19th open, which is at the 43.31, as well as the open out here on April the 3rd out at 42.82. That red line, that's the red line in the sand that has been drawn out here. That really becomes resistance for the NASDAQ composite. We'll see what happens when price gets up there. What is that price level today? It probably is about the 41.60-ish level. I don't know exactly where price falls on this line out here, but if we do see price move through there with a wide-ranging bar, what does that set up? Well, that sets up a retracement more deep. That's really horrible grammar out there. Don't let your kids listen to that. That's just simply, how about this sets up a retracement larger than the one that we have seen thus far. That means 42.0865 would be the number out here, because that's the 0.618 retracement. So a gap up yesterday after bullish engulfing from the prior day session. If, in fact, the NASDAQ composite can get through this trend line here, that is going to say something to think about. So that's what's going on inside one of the weak links out there inside of the market. Let's go take a look at the, let's see what's up in store for us next. Now, we are into a nice little buy mode using the Rhodes momentum indicator signal. We'll be there today. We'll get a confirmation of that today. Yesterday was the buy signal out here once we got a close above that doji candle from Thursday, the May 8th high out there, by the way, which was 41.0920. That's what's going on in one of the weak links. Let's go take a look at non-weak link. That's the Dow Jones Industrials. Dow right now up above resistance, up so high. The resistance now, which should become support, is going to be the bearish engulfing candle formed on April the 4th. That high is 16,631.63. So long as price stays above that area, that becomes support. That becomes bullish. That also helps in the consolidation breakout, about a 600-point consolidation breakout inside of the Dow. It's got its sights set at about, in the futures contract, right around the 17,100-ish type area. And that is what I expect to see inside of the Dow unfold. Not today, but over time. So the Dow is long and strong. It really has been ever since it gave us the Rhodes momentum buy signal inside the Dow. It did it right here on the trading session of April the 15th out there. Went long, got a confirmation, got a really double confirmation back here on April 17th, April 18th, and it has never given up the trend since then. So it is in a strong, nice, bullish trend that is inside the Dow. Do not try to short the Dow. That does not make any sense at all to me, because that thing is strong. If we take a look at the transports out here, let's go see what the trannies are doing. They're up above resistance. Their resistance line, really, you'd have to say it's the horizontal. It's my cursor line out. We had a bearish engulfing occur on April 24th. That says it's the high of the prior session, which in the trannies, April 23rd's high was 77.74. That happens to coincide with the shooting star candle that took place on May 2nd. This was the front line for the bears. The front line for the bears, they just simply got pummeled, overrun yesterday. That says that should really be the support level on any kind of pullback out here. So 77.72 is a key level of support inside of the transports right now. They're trading out at 79.01. That is in long and strong mode as well. If we take a look at the NDX 100, right? Just like the composite, a little bit weak out there, but this thing here is up above resistance. Resistance right now really being the bear sash candle, really being the session from April the 10th. That says that it's the high of the prior session, April 9th out here. That says 36.02. 35. It's trading at 36.23 right now. That should become a level of support. You've also got this little hanging man. They say that is a bearish candle. I beg to differ. Maybe it is, but it's not a tradable bearish candle out there, that's for sure. But you do have a bearish engulfing candle. That's that May 2nd high out there. That uses as the high the prior session in this case, which is 36.1303. So that's really where your lines of support should be inside of the NDX 100. If we take a look at the New York Stock Exchange making new highs yesterday, that is very bullish because it's up above its 2007 highs. It's 6,000 point consolidation to the upside. If we take a look at any kind of bearish moves out here, where is support? Where is support? When we take a look at the New York Stock Exchange. I'm going to have to say, I'd probably just come right back here to the trading session from May 5th out here, up at about the 10,634.05 level. Right now it's trading out at 10,717 out here. New York Stock Exchange yesterday, the bulls were able to take back the ball from the bears out there. In order for that to reverse today, you need to see net declining issues of 634 or more. As we speak right now, inside the NYSE, 278 net advancing issues. Nice wide market breadth yesterday inside the New York Stock Exchange. If we take a look at the Russell 2000 out here, again, we're looking at daily charts. Daily chart yesterday giving you a Rhodes momentum buy signal out here. And that's when we saw it close above the trading session from May the 8th out there. That high, 1119.80. It is not now the confirmation would be a crossover these two moving average lines. We don't have that in place here just yet, but you know what? Coming off the bottom like it did, nice little rising window, nice little gap up is really what that is. Also, after a piercing candle, after rejection of the February 5th lows out here with light volume, after making a 100% move, a normal retracement, at least a normal retracement is underway. So what does that really set up as a target here for the Russell? Well, you always look at the previous swing point, the previous change in direction, the previous intersection out here, and that took place on April the 22nd. That really becomes the target price point, the natural target price point for the Russell 2000. That's up in the 1157-ish area. It's trading at 1132 as we speak right now. Nice wide-ranging bar yesterday. Let's take a look at the, what do we have out here? Let's take a look at the XAU. Let's go see what the XAU is doing here this morning. Not a ton. Although yesterday was a potential Rhodes momentum move yesterday when it closed above the session from Friday out here. Now the key is that it's running into resistance of these two moving averages, so I'm not that enthused yet inside of the XAU. Of course, the real key with regard to the XAU and the reason to be enthused would be because of what takes place inside of Goldilocks and silver, because what we know here, if I go over take a look at the gold chart specifically, it shows the GDX, I believe, on the screen. Let's see here. We come back from this break. Well, that might be the U.S. dollar index out here. Yeah, that's the U.S. dollar index. We come back from this break out here. We'll go take a look at gold. We'll go take a look at the GDX. We'll overlay that on the chart out there just so you can see the tango, the dance that the two of them do. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 29 points. S&P's up 3 right now. And, back in 1946, Donald Bradley published a book called The Stock Market Prediction. Now, the science behind this book was based on the premise that planetary pairs, such as Venus and Uranus, they have a positive or a negative bias in the market, and they, in essence, they are able to collectively identify the mood swing of the masses, you and me. And so by assigning points to these biases, what Bradley was able to do was produce a graph that gave a prediction for what the stock market would do in the future years. You see, I've got an ephemeris, a digital ephemeris. It's got 300 years worth of data from 1800 to 2100. I could have much more, but I figured for my testing purposes, 300 years worth of data was pretty good out there. Now, because Bradley's work is based on all of these planetary cycles, and the bias is based on conjunction, it's based on 5 areas, 5 planetary angles out there. Like opposition is 180 degrees out there. And in any event, we're able to take the ephemeris, take all this stuff, and create the Bradley model. And that's what I've got on my screen here right now. Now, you can find years ago, I saw the book on the internet. Somebody copied it in a PDF file, so you can go out there and you can actually download it and you can read it. There's nothing about zodiac signs or anything along those lines. It's just really planetary alignments. I have a distribution table. I looked at it. I looked for it during the break out there. I've got it buried somewhere. I put it in a safe spot so that I could easily find it. And of course, you know what that means. If you've ever done that, you put something in a very secure spot so that when you need to go get it, you'll be able to locate it. I thought it was in a certain spreadsheet. It's not there. I'm sure it's in another one. I can find it at some other point in time. But what's really interesting here is the Ensign Windows software. So I use really 3 charting applications to help me and assist me in my trading. One is what you see on the screen here, is the Ensign Windows. I use the eSignal platform, and I use Ninja Trader out there. So those are the 3 tools that I use. Now, inside of Ensign Windows, it's got the Broadly, how about that? The Bradley model right there so that you can overlay it. Now, if you read Bradley's book, this is just my own interpretation when I take a look at patterns out here. I am not one that flips a pattern and says that if something doesn't work, that it's inverted. And because, the problem that I have with inversions, it means that I can never be wrong, right? Or the model itself that you're using can never be wrong. And just as a guy of logic out there, to me, that just doesn't make a whole lot of sense out here. It's either working or it's not working. If it's working, maybe you pay attention to it. If it's not working, just simply disregard it and go on to something else out here. Well, what's interesting, if you follow the blue squiggly lines here, now it's not meant with regard to one thing is very clear. Or at least it's very clear to me after following this for a number of years out here, and that is that the declines or the increase that you see are not relevant with regard to a percentage that you should see in the marketplace. Just because you see some huge move does not mean that you're going to see that. It's a directional thing. It's a directional thing, just like correlations between the U.S. dollar index and commodities like gold or silver, just like the euro, Japanese yen, and the stock market out here. It's not. I wish it were simple. I wish it were a simple formula of tick for tick out there. It's not. Just it's important to know that it's directional indicators out there, and that alone is substantially helpful. So if you were one that, and I don't care whether you subscribe to the theory of inversions or not, I'm just telling you my theory, and I have a real tough time with logic that says that inversions somehow mean that is still working. What's that guy? He's a comedian out there. He does a little. What's that guy's name? He's one of my favorite comedians. He uses a lot of dirty words out there, vulgar language, but I think in comedy that works really well. In any event out here, if we take a look at, Louis Black. You ever seen Louis Black? And a lot of people, he gets on his nerves. You go see him live. It's a great show out there, and it is really great. In any event here, if you were one that was following the Bradley model out here, what you would see, what's kind of interesting here, I'm going to blow it up on my chart, that the low that came in on May 7th, if you're looking at my chart here, that actually was a low inside of the Bradley model. Now, I'm not offsetting it one way or the other. This is just simply, it's drawn on the chart, it is as is, and this says that if you were to follow and subscribe to the Bradley model, it made a low. In fact, it made a low. In fact, the Bradley model here doesn't make its high. Let me pull this back out here. It doesn't make its high until sometime in August. Maybe around August the 12th or so. That doesn't mean that it goes straight up. But it has, and if we take a look at Bradley's work, if his work is correct, and we apply this to the chart, what's really interesting is the low that came in on May 7th correlates right to a low inside his model as applied to the Dow out here. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. I didn't realize it, but Lewis Black is actually a subscriber of Mastering Probability, because during the break he said, "Are you kidding me? What do you mean you can't find that table? It's included in your newsletter service." Yeah, it was right in front of me all the time. I knew I put it in a safe spot so that I wouldn't lose it. And on page, this is my expanded version of the newsletter that goes out, on page 54 of the newsletter service, here's Donald Bradley's correlation of planetary configurations when they occur, especially when things are at conjunction. When they're at the other 4-area sextile, which is a 60-degree angle out there, square when the planets are aligned at a 90-degree angle, trine when they're at 120 degrees in opposition at 180. You can see they've got either bullish or bearish. So bullish is sextile, bullish is a trine, supposedly. Square is a bearish, opposition is a bearish. Now, I've tried taking these planets and overlaying them on charts to see if there was some type of competitive advantage, right? Because a competitive advantage is a good thing to have, and I've never been able to unlock that code out there. That doesn't mean that I don't pay attention to certain ones. Now, at the bottom is when the planets are at conjunction, when they're at 0 degrees, and that's a table that identifies when something is bullish or bearish. Now, the reason I bring that up today is May 13th. Tomorrow, May 14th, we do have a Venus square Pluto, right? Venus square, well, you don't know if it's right or not, but you have to assume that I'm right. I wouldn't be sharing data with you that's not right out there. So we have a square, and a square is normally bearish. right? So that's one thing that we've got going on inside of the marketplace. If we take a look at also, I mentioned that it was Venus and Pluto. Well, Venus and Pluto out here, I also created this other table, which is pretty cool. They're the 0.616 planets, very close to 0.618 with regard to the time that it takes to revolve around each other. And so you've got, in essence, a 0.618 retracement that is taking place. What we also have going on is we've got a full moon tomorrow. So we'll take a look at the full moon cycle. That comes in tomorrow at our time. Eastern Standard Time is going to be at 15:17. So what is that, 3:17 in the afternoon? You ought to be able to see that big old full moon somewhere. Where, I don't know, but it should be up in the sky, or will be coming up in the sky. So that's when the full moon comes in. So if we come back and we take a look at the S&P 500, if you were wanting to take a look at the potential turns that are taking place, we've got a potential 1.618 expansion, A to B equals C to up, a little butterfly pattern that would occur here coming off of the swing point from April the 22nd. I guess you could form that. And if we take a look at that, that would say the price level that we ought to see the S&P 500 move to. We see is about 1906. So somewhere right around 1906. You're at 1901 right now. That is one potential pattern that is out there. Here is a chart that shows, now let me go ahead and get rid of a couple of these things out here. Here is a chart that shows the full moons and new moons out here. So I keep track of them to see when they're working, when they're not working out here. So on May 15th, April 15th, I should say. April 15th, we saw a full moon that formed what? It formed a bottom. We saw that take place here on March 16th as well. Now, of course, the markets were moving down into those levels. The last time we had a full moon with the market moving up, much like we have right now, that took place on February 14th. And all that was really just a little bit of a stall out there. In fact, we saw the markets move up over that weekend, February 14th, when the full moon came in. The next trading session on the 18th didn't really do much. You actually had a key reversal session on February 19th out there, and that failed. And that was markets went ahead and made a higher high. In fact, they made probably an expansion of swing points out here. The swing points from January 15th to the low down on February 5th. Yeah, of course it did. A expansion of 1.272, that 1881 level out here. So that's what the full moons really work really, really well when markets are moving down into them. That doesn't mean that they don't when markets are moving higher. There's a full moon that was able to stop price, and this is back on January 16th of 2014. Of course, what we also saw taking place was a test of a swing point. I don't know if the December 31st, we know that swing point had light volume out there. So it was a test of a swing point on light volume out there. And nonetheless, we'll get some candle signals, but that's what's going on in the full moon, new moon corridor out here. The last new moon that came in, that was on April 29th. It really has not acted in any way, shape, or form that I've been able to see as a high probability bet of a market reversal. Nonetheless, if the markets continue to move up today, which right now they are, what it's also telling us on the intraday charts, they just continue to get more and more overbought, and we should be expecting a retracement, a pullback out there. In essence, that's really what this pattern or this group of patterns here may be setting up for us. So that's what's going on as we take a look at the lunar world out there. That's what's going on in my world. Let's go see what's going on in the rest of the world of the currencies out here. Let's go check out a couple currency pairs, because it is the euro, U.S. dollar that we need to focus on. We don't need to, but we're going to focus on it. And why we're going to focus on it is because prices moved back on the weekly chart. The week is not over, but prices pulled back into the trend line. The trend line coming off of the highs here from July 18th. That's your first touch point out at 160.6036 out here. Your next touch point is going to be May 6th high. This is a weekly chart again. We're looking at 1.4938. That's a black diagonal line going across my screen. Now, just because it's coming back inside the trend, it's coming back in here. It's testing it, but it is the first signal that maybe this has been a false break. It'll really be a false break if it gets inside that red line. That is the channel line out here. If price just comes back and tests that area, pierces down there, and then closes back above this little rising price channel. So we've got a number of price channels going on my screen, but they're acting as really good levels of resistance and support out here. Right now we can see that for this week, and this week only, at this moment, we have seen that price has pierced that area. So it is something for us to focus on and pay attention to. That is in the euro U.S. dollar. If we go see what the Great British Pound is doing, last week it formed a little shooting star candle. So it's got some resistance out here. Of course, we knew it was going to run into resistance sooner than later as it was taking on its last area of resistance, and that is the high. And again, this is a weekly chart that we're looking at. That is the high from August 7th, 2009, which it's trying to take out. And once it does, that's a move up to the 182-ish type level out here. So we did have a shooting star candle last week out here. So you've got resistance set up at its high, which is 1.699 out there. That is on the Great British Pound. Best thing you could be doing is looking for some type of pattern to the upside, in my opinion, out here, because of the break of this long-term consolidation. In order for this to be a total failure, you'd need to see price probably close back below, I'd say 1.645.7 out there. That would be in the Great British Pound. We go take a look at, as long as we're in the currency market, let's go take a look at the U.S. dollar index. Remember, the U.S. dollar index is a basket of currency pairs. Of course, it found support at its friends, the bulls. We know those are the same bulls that were hanging out the week of February 15th as they formed that bullish engulfing bull sash candle. The same bulls that were out there defending the lows from the price point of, about 79 to 17 out here. Those bulls also showed up to defend their territory on November the 1st. So it's not unusual for us to see the fight going on inside the euro and its trends, as well as the dollar. If the U.S. dollar index trades below the 78.92 level, there's really nothing to stop it from moving all the way back down into the October 28th area, and that, quite frankly, takes you all the way back to the swing point from May of 2011. I'm not saying that's going to happen, but if it does break through that area, that is what the likely outcome is. That is on the U.S. dollar index. Now, I guess before we went to break, I was talking about gold, and somehow I got carried away on the Bradley model. I guess it's because I've been paying attention to it, and I just simply have forgot to mention it to each of you out there. And I know a number of you, you trade the Bradley model. There are many of you that may not be happy with Stevie's interpretation of an inversion, but I say go read Donald Bradley's book and then send me the page that talks about, well, inversions mean it's still working. It just means it's working in the opposite direction. In any event, if we take a look at the GDX out here, that's what's on my screen. The red line out here, that happens to be the gold contract. And what you can see is this is, again, nothing more than a tango. It doesn't tell you where prices get. It's a directional indicator out here. And what would get me interested in that XAU chart, and was the XAU chart where I was saying, hey, XAU just simply has a nice Rhodes momentum indicator buy signal, but it had some resistance. And it hasn't really proven the point to me, and it hasn't proven the point because Goldilocks has not proven the point to me either. So that's the correlation that is there. There's also the correlation between the U.S. dollar index, which, when gold was moving down, this chart here is inverted. That means that is the red line, which is the U.S. dollar index, is moving down. That means that the U.S. dollar index is getting stronger. And the interpretation that if the U.S. dollar index is up 100 pips out there, 100 ticks out there, that gold should be down, X number of dollars. I don't see that correlation. I wish that correlation was out there. That would be a cool correlation because then it would make it much easier to call. What we can see is that we've actually seen the chart we're looking at is gold, and as the U.S. dollar index was getting stronger, gold was pulling back a little bit, or got into an area here where it created these two little dojis in a row. That was on May the 8th as well as May the 9th out here. Again, the dojis, as they're making lows, they don't mean a whole lot to me because I can't use them as support. I can't really use them as anything in at least the line of work that I do. It does mean that the market is somewhat confused out here. I can use it in essence if yesterday as we were talking, we were taking a look at one of the most significant bottoming patterns that were out here. What gold needed to do yesterday was really close above the level of 1307.90. It failed to do so. And so that pattern is kind of irrelevant at the moment. So there's your correlations between, again, so use it as a directional thing, just as I do with regard to the euro Japanese yen out here. And sometimes we get carried away and we think that just like on the Bradley model, just because we see a huge move up or down, that we expect there to be the same price equivalent move. And my experience has been it doesn't happen. Sorry about that. I needed a swig of water out there. That is a technical term that each of us contributors need out here. You don't see it on the chart pattern, but boy, it's in the throat pattern out here. Now, let's take a look at some core stocks out here. I see some in the den. The market is moving up with no juice, no volume. That's really why I created the Rhodes Momentum Indicator System, because really, if you take a look at it, I'm going to go back here, and I'm going to go. Let's put up the daily chart, and the absolute accurate argument is that the market has been moving up on light volume. Quite frankly, since the 2009 lows out here. Let me put a weekly chart out here. And that was why I said, hey, that's where I really started to take a look at, what I love using volume for. When you take a look at a chart, is the very first thing your eyes should do is go take a look and see where those volume bars are. So that's one way to use it, because when price ever falls out of bed, that's where it's falling to. You want to see where those levels of support are. The reason why I went and created the Rhodes Momentum Indicator was to come up with something, because I understood the trend was your friend out here, and that volume was only one of four elements that really make up what's going on with regard to price inside a stock chart out here. And so that's where that's what we're looking at on my screen here. This is a weekly chart, and this is where the trend is your friend, and what it will do is it will keep you in trades longer. It's helpful to look at long-term positions out here. If you take a look at the signals out here on my charting system. If you go back to November of 2012, this is a weekly chart, you'll see a little green box out here. You may not be able to read it. It's hard for me to read it because I've got a number of things that are turned on. But what I can tell you is that's what I like to call a lower threshold, a Rhodes lower threshold signal out here. And what you're looking for is if price doesn't break the lows of that signal on a weekly chart, that's giving you one potential sign of being bullish. And as soon as you see a close above the high of that session, that's what you saw take place on November 23rd out there. That's what's giving you the buy pattern out there. And then you start to see a lagging indicator, these moving averages cross over, and when you see that, that is really what's helping you to understand what's going on inside the trend. Well, the last time inside of the S&P 500 that we're looking at, that we saw a lower threshold candle, that happened to be the weekend of January 31st, 2014 out there. Following week, which is kind of cool, we had both a bullish engulfing, bull sash, hammer candle out there. A hammer candle just says the market is trying to establish and find some lows. Now what do we have? The very following week out here, and you see these two moving averages, they never crossed over each other. And then we have the week of February 14th, the Valentine's week out here, we got the bullish signal. In fact, if you take a look on a weekly chart, remember I was showing you the daily chart? I was showing you what let's call it the Miami Hurricane, because it's the U. It represents the U in the logo of the Miami Hurricanes out there. We actually, now that I'm looking at this, we actually got that pattern that occurred right here, and that was on February 14th. So nice, big, bullish signal out here. The answer is yes, we're going up on light volume, but the trend is your friend, and always remember, volume is only one of four primary elements of any stock chart that we take a look at out here. Right now we've got a resistance of that price is above. It's the shooting star candle. That's a reversal signal. That's where the bears were last camped out. That was the April 4th high. That price level, this is on the weekly chart as well, that price level is at 1897.28. As long as price closes above that this week, that is also bullish. Prices, you can see right now, still going up on less relative strength out there. Never a good thing, but the market can always resolve that over time. Right now, we got the Dow up 32, S&P is up 4, NASDAQ up 8, Russell 2000 down 34 cents. I like the way the market is working out this overbought condition. Just kind of moving sideways. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 37, S&P is at 5, NASDAQ is up 9 points out here. VIX index right now trading out at 1210. The 50-day exponential moving average, that's where damage can be done. As long as the VIX is trading below that, markets either move sideways to up, higher out here. There's a little hammer candle inside the VIX. By the way, the 50-day exponential moving average priced at 13.89 right now. A little hammer candle on the daily chart. That's the December 26th low, 1169. So far, we've seen yesterday the actual low that we saw inside the VIX was 1188. Of course, you know the expression, if you see a price close below a hammer, if you're long, you're wrong. That would mean is that in the case of the VIX, it would travel down to its next swing point low, which was on March 14th, 2013, right around the 1105 area. Right now, it is priced at 1210. Now, what I want you to remember is that markets that top. We've seen, if we take a look at the NASDAQ, the Russell 2000, and the NDX 100, they, at this stage here on March the 6th, formed a potential top. Right, we're in the 6-month unfavorable seasonal cycle. And when markets make their tops, significant tops, many people are under the misnomer that all markets top on the same day. And that is not the case. If you were to go back in 2007, you'll see the Russell 2000 was the lead dog. It topped on June 1st. The NYSE didn't top until 4 months later on October 11th, which also simultaneously we had the Dow and the S&P 500 also top and make its high on October 11th. The NDX 100 didn't make its high until October 31st, along with the composite. That then was the final top in the marketplace out there, and there are patterns out there that show those tops also being formed. The most consistent pattern, it's not a lunar pattern out there, it's where price makes a higher high on less relative strength. It works on all time frames. It works on, and you really need to learn how to trade that pattern. In 2000, and in the year 2000, it's really what I'm trying to get out, the Dow was the lead dog. The Dow made its high on January 14th. The Russell and the composite, they made their highs on March 10th. The S&P waited until March 24th, and the New York Stock Exchange, she waited until September 1st of 2000. Nearly 9 months, 8.5 months later before the New York Stock Exchange finally made its high. So far what we've got right now is the Russell, NDX 100, and composite that have made a high out there. Well, now we've got the Dow, in essence, today, because it's at all-time highs. A top could form at any point in time. I can't control that, right? All I can control is the patterns, what they say, what we need to be focused on. If we take a look at the S&P 500 here right now, we can see it is in the month of May making a higher high with what? With less relative strength. Last time we saw that take place on a monthly chart was when? Was back in October of 2007 out there. Now, just because we're seeing that this can resolve itself, it can resolve itself to the upside here. We saw this actually begin to take place back in September of 2007, but you never got the signal because the market was able to resolve itself the very following month. So that still is the potential, that still is the possibility out here. That's on the S&P 500. I might take a look at the New York Stock Exchange on its monthly chart. Let's go take a look at it because we know that it is also at higher highs. Well, back in 2007, it too made its final high with what? With less relative strength, a price relative strength divergent pattern. We have that in place here right now. And that's where we start to get a little bit iffy here. Now, we don't have any type of reversal signal. What we have, though, is we have the first element of something to say, be careful. So when I'm bullish, or it's not really me, when I'm reading the stock charts and reading for you the information, what they are saying to us, what I'm here to do is to each day, as of that moment, in this case here, it's 10:58 a.m. on May the 13th, is give you the signals that are going on the different time frames. If I can do that, if I can keep your mind all straight, it should help you in your trading and investing. Folks, it is Terrific Tuesday. We got Basil Chapman up next. Then we've got the Options Hour. Then we've got Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show from 4 to 6, as always. Thanks so much for joining me. I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.